A very active past 12 months in MENA financing. For the first year, debt capital markets issuance exceeded syndicated loan volumes. From an FAB perspective, it was, of course, our first year as operation as a new firm. We were very proud to end the year as the #1 ranked book runner of syndicated loans, not only here in the GCC, but also across MENA. We remain the top regional book runner in bonds and Sukuk. So a lot to be proud of, but by virtue of that market-leading position, we've of course led a number of landmark trades. Close to home, we were honoured to be book runner on Abu Dhabi's $10 billion bond issue across 5s, 10s and 30s. We were equally privileged to be book runner on a $6 billion syndicated loan for ADNOC, their debut loan fundraising in the international markets. Also for ADNOC, we led their debut capital markets transaction, a $3 billion project bond that was tremendously well received. Further away from home, in keeping with FAB's strategy to be regionally dominant and through that regionally dominance to be internationally relevant, we led our third successive Sukuk for the Hong Kong government. In keeping with our position of leadership in global Islamic finance, we led Sukuk also for the Indonesian government. So a lot to be proud of, and hopefully we'll see this continue over the course of 2018. When looking at the MENA financing landscape, I think it's important to delineate between the loan market and the debt capital market, because whilst there are similarities, the two certainly operate quite separately. In the loan space, 2017 was the first year where syndicated loan volumes actually fell below the amount of issuance that we saw across bonds and Sukuk. I expect that to continue through 2018. Heaviest users of loan product will continue to be corporates. We're seeing a continuing amount of refinancing. There's a relatively minimal amount of new money deals that we are seeing. Considerable compression across pricing in the loan space. It's a very aggressive market competitively for lenders, and a very good environment to be a borrower at the present time. In contrast, the debt capital market, we're seeing upward pressure on spreads. Sovereigns for the last several years, as a result of the lower price of oil, have been the primary drivers of that market. They're to a very large extent responsible for the significant increase in issuance volumes that we saw through 2016, 2017, and we've seen in the first quarter of this year. I expect that to continue, notwithstanding that the price of oil touched $75 earlier this week. So sovereigns will lead the charge in the debt capital market. We'll see, I believe, more FIG issuance this year than we have in the past 12 months. Certainly the first quarter of this year, we've seen an uptick in the amount of bond and particularly Sukuk transactions that have come out of MENA financial institutions. And I think steady state from corporates. Corporates selectively will be looking to come to the capital market to complement the significant depth of liquidity that they enjoy in the loan space.